Hey, S corporation owners, you need to pay yourself, right? But you don't know how to. Do I take a salary? Do I take a distribution? I don't know what the frick to do. Don't worry, don't fret. That's what we're going over today, the quarterly payroll allocation. What's up, everyone? Mike, back at it, bringing you some quality content when it comes to tax strategy, tax planning, alongside my partner in crime and buddy and friend, Mr. Andrew D'Amico, also a CPA. If you get fired up about tax strategy as much as we do, make sure you bang that subscribe button, and welcome to the Ledgerly family. All right, let's dive right into it. The quarterly payroll allocation. Now, full disclosure here, what we're going to go over is something that we actually do and what's included with our advisory package with our advisory clients. And we're going to give you a little taste of what it looks like right here today. So who does it apply to? It applies to you S corporation owners right here, because you S corporation owners need to do a split. You need to do distribution and W-2. But we need to dial that in for you. And how do we dial this in for you? Let's take a big step back. Let's do a budget, people. How much do you need to live on? What are your fixed expenses every month? What are your variable expenses that you need to take into consideration? The other piece of the pie that affects this calculation is your federal income taxes. So let's dial in that number. And then from there, we can dial in the split of what's going to be W-2 and what's going to be distribution, because the goal is to limit those payroll taxes for you. The W-2 is going to pay the payroll taxes. The distribution's not. So we want to keep that W-2 as low as possible for payroll tax reasons. So let's do a budget. And the other thing you got to keep in mind is you are not going to be on fixed payroll. You're not going to be taking a weekly paycheck or bi-weekly paycheck. You're just going to be taking money out of the business as a distribution. What? That's crazy. That doesn't make sense. Is that even legal? Don't worry. That's what we're going over today. Okay, so why don't we do this? Let's go over a real case study here. So we got the whiteboard up. Now, let's say that you did your budget and you need $100,000 to live on every year, okay? And let's say quarter one, you took out $25,000. Quarter two, you took out $50,000. Quarter three, you didn't take out anything. In quarter four, you took out another $25,000. Okay, what does this mean? This is where we go over to our handy dandy payroll matrix, made famous by the one and only Mark Kohler. And this is a matrix that he uses for his clients and he uses in his tax advisory network for us. So when we look at this matrix, if we're going to take $100,000 out down here at the bottom, what does this tell us? This means that $40,000 will be allocated to payroll. The other 60 is going to be a distribution. So let's go back over to our case study over here. January through March, you took out $25,000 out of your business. January, February, March, 3 months. April 30th, your payroll tax return is due. Your 941. So you're going to go to whoever you use, QuickBooks Online Payroll, ADP, Gusto, whatever payroll company you use, and you're going to say, hey, me, the business owner, yep, that's me. I took out $25,000 as a distribution. That's not all going to be payroll. You're going to allocate, call it $10,000 to payroll. So you're only paying FICA payroll tax on the $10,000, which means $15,000. There's no payroll tax on it. Same thing in quarter two, April, May, June. So in July, let's say, okay, you took out $50,000. Now we're going to go to ADP, Gusto, whoever it might be. We're going to say, hey, I took out $50,000, but I'm only going to pay payroll tax on $20,000. What does that mean? $30,000 avoids FICA. Okay, freaking love it. Now, what if in quarter three you didn't take any distribution? Guess what? Zero. They're going to file the 941 for you, but it's going to be zero for you. You might have other employees in the business, so there might be monies that are reported on the 941 for your other employees, but you, the business owner, zero. Now, in quarter four, just like quarter one, let's do another $10,000. So now, if we add all of this up, $40,000 in payroll, you took out 100, the other 60, you're only paying federal income tax on, not payroll tax. So let's take a step back. You're the hardworking business owner. You don't want to worry about every week, every other week, every month, knowing how much to pay yourself, take out. Here's the rule of thumb. Make your budget, take out what you need. You don't want to take out too much because we don't want to do too much in payroll tax. You don't want to take out too little because you need to pay your bills outside of the business. So big step number one, do a budget, okay? And then we will worry about dialing in your quarterly payroll allocation at the end of every quarter. 3 months go by. In that fourth month, we dial in your payroll. 3 months, fourth month, we dial in. 3 months, fourth month, we dial in. And make sure you use this payroll matrix because every year is different. Every year is a moving target. If you're going to have kids, if you're going to get married, if you want to invest in real estate, this $100,000 of cash flow might not be applicable next year. It might be applicable this year, but it might not be next year or the year after. So make sure you do your due diligence. The fact that you're watching this video already speaks 1,000 words to us, and that we know that you would be an amazing candidate for our advisory services. So if you like this type of stuff and you like learning this way, visual, and us drawing it out for you, then get in touch. Let's set up an advisory call and let's dial in that quarterly payroll allocation to make sure you're keeping money in your pocket and not the government. We'll see you guys on the other side.